Good morning. I'm looking at a buy trade idea in US dollar Chinese yuan. Now, this currency pair was highlighted in the Saxo Strat's Emerging Market FX Weekly Report. John Hardy wrote a really nice piece highlighting the key fundamental drivers. And I thought I'd take this opportunity to look at the technical picture to see whether I could formulate a good risk-reward trade idea. Now, it's a buy trade idea, and I'll explain why. I'll drill down from the monthly chart to the hourly chart to give full colour. Now, it is quite a key technical area we are trading around. If we go back as far as 2014 and 15, there was good resistance levels here until August 2015 when prices moved through resistance and came back, retested the level, and then moved higher towards the end of 2016. So since then, we've been in a bearish channel, moving lower, and we're back to these levels. Now, the initial prices have moved through the resistance, turned into support, but it's now trading back above the support. So it's forming a doji candle on the monthly chart. There's still 10 days to go, so it's not over yet. But if we look at the weekly chart, we can see 3 consecutive doji candles, and this is a concern for the bears. So this indecision could lead to a reaction higher, and also with oversold conditions on the RSI, that also points to a move higher. The level I'm looking at initially is this 38.2% Fibonacci retracement level at 642. The daily chart, also the candles are looking good. We've had this bullish outside candle when we posted the low, and although prices moved lower, we formed a higher low on 2 occasions, and again we've seen both on the 16th and the 19th of Feb 2 bullish candles. So it looks promising from this short-term perspective. Now, we have got a symmetrical triangle formation. Now, this is normally a continuation chart, but not always. So I'll show you the reason why I don't think it will be on this occasion. First of all, I'll pop to the hourly chart. This is the hourly chart, and we've formed a reverse head and shoulders formation. We can see the shoulder here, the head, the shoulder, the neckline, and the break of the neckline at 630. Now, the measured move target for this is 633.26, and that is key for the reason of the symmetrical triangle. Now, 633 would be a break of the top of the symmetrical triangle. Now, this in turn will lead to the symmetrical triangle formation target of a move towards 643 or in that area, and that goes back to the 38.2% Fibonacci retracement level of 642. So how do we set the long in this trade idea? Well, currently I would set longs around this level, and I would also set on a dip to 630. Now, the stop in this trade, as I mentioned before, is going to be 625, the lows, and but you could also, a tighter stop could be placed just below 627. Now, the targets on this trade, as I've said before, we'll go back to the weekly chart, would be a retracement to 642, but also I'd be looking for a 61.8% retracement to 652.